Welcome to the Sex, Money, and Real Estate Podcast, the show for real estate couples about how to close more deals in the bedroom. My name is Nancy Jamison.
And I'm Bill Jamison.
And each week we deep dive into juicy, intentional, sexy conversations, sharing with you what it takes to create balance in your intimate relationships and your real estate business. Thank you so much for being here.
Baby.
Yes. Hello. Hey, baby.
Hey, baby. And hey, baby Faye. What's going on?
Hello.
Hey, baby Faye. Oh, that's awesome. Yes. All right, folks. So today we have our amazing wealth manager in the house, Miss Faye Sykes. Gosh,
Hello.
We've been using Faye. We've been friends with Faye for about a decade. We've been using Faye for about 9 years. We had to definitely get our poop in a group first before we fully vested with Faye, literally, because, of our process and all those things. So, as part of sex, money, and real estate, two of the biggest things that people really go through in their intimate relationship is moving through that conversation of sex and moving through that conversation of money. And so we thought, who better to have on the show than our wealth manager, so she can disperse all of her beautiful, incredible experience and knowledge with you, and then just really, take the conversation where it goes. So I'm excited.
Yeah,
Are you excited?
I'm super excited.
Beautiful. Well, let me just read a little bit about Faye.
Or
just
maybe
so
Faye
everybody...
wants to, say what she wants to say about Faye.
Well, I'm a native of Wisconsin. Georgia is actually the 9th state and 19th city here in Atlanta that I've lived in.
Oh my gosh.
That's crazy.
So I've been all over. And I used to be a fashion designer and a commodity broker before coming into being a wealth manager. So I've been in the financial industry for over 20 years.
Okay.
Wow.
And I will say, I think this is very important. When I was a fashion designer, I went and sat down with a wealth manager because I wanted to get my poop in a group, as you just beautifully said, eloquently said.
Wow.
And the gentleman sounded like a Charlie Brown adult.
Oh boy.
Wah, 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 used every big word that he had. And he gave me a headache. And I was like, it just wasn't knowledgeable from my family. It wasn't something we talked about. And fast forward several years later, I ended up switching my career not only to educate myself, but help educate as many other people as possible.
Wow. Yeah. Yeah.
That's my story, and I'm sticking to it.
Okay. That's a great story.
I love
Thank
it.
you.
That's awesome. What I so I am going to add something here because I really appreciate how you approach this conversation. And she says, as a holistic planner, she reviews your entire financial junk drawer and helps you not only clean it up, but see areas that you may need to address. So
Yeah, those blind spots, man.
Absolutely. And it's all about the relationship to the money. And so I just really appreciate your holistic approach. So Faye Sykes here in Atlanta, Georgia, Scarlet Oak Financial Services. Why don't you give our folks the website and your contact info?
Oh, absolutely. The company is Scarlet with one T, Scarlet, Oak Financial Services, but the website is scarletoakfs.com. My email is fsykes, F-S-Y-K-E-S, at scarletoakfs.com. And my phone number is 404-354-1039.
Awesome. Yeah. And I really appreciate it. I love the whole team. I love the whole office. They're just so awesome and very helpful. And I just really appreciate your approach. So thank you for that.
Well, we are happy that you're part of our family.
Yes. So as you know, we start all of our episodes with magic. And so we describe magic as our ability to influence self, others, and life in an empowering way. Because of course you can influence in a disempowering way, yet we want to focus on and expand the empowering way in which we have magic. So do either one of you have magic that you want to share today? Anything come up for you?
I can kick it off. I want to just say thank you, baby, for an amazing date night Saturday night.
Oh, yes. What did we do?
So much fun. We went ring shopping.
Well, why in the world would we go ring shopping?
After 20 years of being married, almost 21, why would you go ring shopping?
Yes.
Because unfortunately, your wedding rings
Somebody left the wedding rings,
on a boat.
the cruise in January.
Oh,
in the
no.
safe. Yeah.
Yep.
And
Yeah.
they didn't retrieve them for you?
No. I mean, it was a 2-month long investigation. They were awesome. They really were. It was very thorough, and they interviewed the crew. They interviewed the
Insurance?
the dudes that were in our, that took care of our room.
Oh my gosh.
Yeah, it was a little.
That's sad.
It was, well, yeah, it was. And then we're like, when, turning it around, we're like, well, 20 years together, and it'd be a great time to update the rings.
Yeah, time to get new diamonds.
So it wasn't necessarily like our first choice.
Sure.
And on the other hand, we have an amazing insurance company and agent that we turned in the claim, and 2 weeks later they cut us a check. And we were able to go shopping for something, even greater than what we had. So we had so much fun.
We had a lot of fun.
Kind of rekindling that spirit from days gone by, and doing, looking for the ring and the settings and the diamond.
Yeah, all of it. I mean, I did. I tried on every single ring in that ring case.
Oh my gosh.
And so it's a custom
awesome.
ring. It's a custom ring shop. So the reason I don't have it yet, Faye's looking at my finger like,
I was
freaking ring?
glancing over. I sure was.
And but it's a custom ring shop. So they actually, I tried on like a mock up of it, and then selected the center stone, and then they're making it.
Yeah, they have to actually make the ring to the stone.
Yeah.
So it's not like you can just drop it in. So it's cool. It's really cool. So
it is
super fun. It was great getting tacos afterwards and coming back to the house. And
Wait, what could better be than tacos?
Right?
Hello.
Tacos and rings.
Love tacos and rings.
Don't we all?
Tacos and diamonds.
Yeah, that's kind of our thing around here.
Yeah, that's hilarious.
So it was a great date night.
It was.
Yeah,
it was a great day night. Yeah, it was
So,
great.
I'm complete.
Thank you.
You're welcome.
Woohoo.
Woo.
Do you have anything, babe?
Well, yeah. For me, sadly 2.5 weeks ago, I lost my beloved pup. And he was just such a joy and really loved him. But I would just say I really appreciate my sister. I was able to go down and visit her down in Florida through all of this COVID stuff. And where she is, all the beach is actually open, but tourists are not allowed.
Okay.
So it was really dead.
Right.
It was
Nice.
like the locals.
Yeah.
And I spent 11 days down there with her, and just it was amazing. And I'm really appreciate and love her so much.
That's amazing. And what a great way to just kind of like take some time for yourself and hang out and recharge through all that. That's awesome.
Absolutely.
Because, a lot of people would just press on.
Yeah, and I needed a little time. When you're quarantined by yourself and your pup goes, it's like the worst thing ever.
Yeah.
No, we've been there. We know what that feels like. And
It's not fun.
right. No, it's not. It's not fun.
That's awesome. Great way to take care of yourself. Beautiful.
Yeah. Thank you. Awesome. All right. So, real quick, my magic was that it was commission day. It was the day that it was time to pay the kids their commission for their jobs that they do around the house and all of their extra jobs that they do. Yes.
Some people call them chores, but we're
we call them jobs. And we pay them commission. Yes, we don't pay them an allowance because, we're commission based.
Yeah, and if they don't do the job,
then they don't get paid.
they don't get the commission. Right.
Right. So from a very young age, we have been teaching them essentially the Dave Ramsey way of, he uses envelopes. We use clear plastic jars with lids, and we had them decorate the jars. And so there's 3 jars. There's a give, save, and spend jar. And so of their commission, they put 10% in give, 20% in save, and 20% in spend. And so we've been doing this now for the better part of, 8. Gosh, how old's Rex? He's almost 14.
I feel like we started this like when they were 6 or 5 years old.
It was probably 5 and 4 maybe. So it's almost 10 years. So immediately, I give them their money and they're like, boom, 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 boom. And then they just started sorting it immediately, like right there on the table, like not even thinking about what the math was. Like they were just, one goes here, two goes here, two goes here, one goes here, two goes here, two goes here. And it was just really beautiful. And then as soon as they sorted it out, they immediately went upstairs, put it in their jars, and then that was it.
I love that.
And now they want to buy lightsabers.
Yeah, now they want to buy like this $200 lightsaber.
Who doesn't
each.
want a lightsaber?
Hello? No, I know.
I would like one.
I get it. I'm just saying.
All right, well, they found the Ipsy Pipsy site, and the metal handle and
the hilts and the lights and
it's
They have workouts where you can get Jedi training.
Really?
I know adults that have done that.
Oh my gosh.
That's fantastic.
Okay. Well, we'll need that little reference
point.
point.
We'll put that in the show notes too.
That's cool. Oh my gosh, I love it. So yes, that was really beautiful, and it's just very exciting. I mean, to develop. I mean, can you imagine paying yourself 20%, saving 10%, or saving 20%, and then giving 10%?
That's really important with parents if they can get their kids to understand. And I said earlier, my parents didn't. That wasn't a focus for them. Yeah. Which is a lot of families out there. Yeah, it's the majority. Yeah. But if you can train them early and get in a good habit, they will carry that on through the rest of their life.
Mm-hmm. Yep. That's the idea.
That's wonderful. I love that.
Yep. It is beautiful. Awesome. Okay. So what are we talking about today, love?
I think we're talking about investments with Faye, right? Like what to invest in today, I believe is somewhere around that title.
Mm-hmm. Yes, absolutely. So we just, part of our financial plan with Faye is that we literally just invested $10,000 with her after above and beyond the IRAs. And we have a couple of trade accounts, but we said, okay, so here's 10 grand. We want to go to play in the stock market. And so, listening to her expert advice and doing some research and then coming back together and, just deciding on what would be the best fit for the boys, because the boys bought stocks and then we bought stocks. And so we put that $10,000 to work. And so it was very exhilarating, very exciting. And so that's one of the things that really preempted this conversation, because again, that money conversation can be tricky and you need a coach. And so who better to have on the podcast than, our wealth manager, our wealth coach. So
I'm so glad to be here.
Yeah. Absolutely. And what a great time to talk about all this during the pandemic, right?
Yes, absolutely. So
absolutely. Well, absolutely. Thank you. So, the thing is, we never know what the top or the bottom of the market is.
Yes.
And obviously, the Dow Jones was up over 29,000. It went down to about 18,000. We're at about 23, 24,000 right now, and of course that's going to fluctuate on a day-to-day basis. There's just some things that, when you're investing that I really, just basics of investing. Yeah. So we're not going to really talk about any specific buy this investment, sure. But there's things that whether you're a veteran or just starting out, that are good to consider. So, right now with the markets being lower, for those folks that do have some cash on the sidelines, this can be a great opportunity, and there can be fortunes made during times like this. Mm-hmm. Because it's like for some of the gas and oil companies, they haven't been this low since 1994, I think is, pretty low. But in general, I'm just going to kind of go through some things that when we're looking at investments that we recommend to think about. Yes. First of all is diversification. So you hear diversify, but what does that really mean? Right. And it means a few different things. So first of all, if you've heard of large cap, mid cap, small cap, large cap are huge corporations. Think of large companies. Mid cap are medium-sized companies, and small cap are smaller companies. A large cap is like going 55, 60 miles an hour on the highway. Okay. And we're going to actually use some real estate analogies. That is like a rental property. So when you think of like Coca-Cola, Home Depot, that are two huge companies here in Atlanta, they not only have a market appreciation, the value of that can go up and down, but it also can have dividends and interest, which is like a rental income.
Got it.
Yeah. Okay. Mm-hmm. So the mid cap or medium-sized companies, these are more growth-focused companies. They're taking most of their profits and putting it back into the company. That is like your primary home.
Okay.
Nobody's really paying you to live in your primary home, but you also might put more money into cabinets and decks and things like that, where the appreciation or the value of that house might grow more over time.
Okay.
That's more like 70 to 80 miles an hour on the highway.
Okay.
Small cap, which think of small startup companies, think of the race to get the COVID, immunization, kind of stuff, or think of startup technology companies. Those small caps is like you're buying land in a kind of undeveloped area that either might strike it rich or just go completely down the tubes.
Okay.
Got it.
So
And that's, think of
super
NASCAR. Think of like 100 miles an hour on the highway.
Okay. Cool.
Vroom.
Right.
So the first thing when we think about diversification is the speed on the highway, or does it give you income? Does it give you more growth? Or could you potentially gain a lot of money or lose all your money?
Sure.
Internationally is another component in there. So you can invest domestic here in the US, but also you've got developed countries like Europe and Japan, or undeveloped countries like Venezuela, India, China. And so the developed countries are going to be a little less risky than the underdeveloped.
Got it.
Sure.
Okay.
Sure.
So the next thing that we look at for, when investing is there's basically three kind of main areas, and we call them cyclical, sensitive, and defensive. So cyclical, I want you to think of financial and real estate. You have longer trends. So the markets might go, we were talking earlier that the real estate market changed to a buyer's market back in 2011. And basically now it went to a seller's market. Went to a seller's market. And then just recently it switched to a buyer's market. That's longer trends for the cyclical. Sensitive, think of like cell phones, or commodities, where it's like, the cell phone companies are always in competition with each other.
Sure.
That's more sensitive. Or commodities like the price of oil or orange juice or things of that nature. Sensitive can flip up and down on a day-to-day basis. Cyclical tends to be longer term trends. And defensive, the third one is, it doesn't really matter what's going on in the economy. People are still going to buy toothpaste, diapers, paper towels, detergent, toilet paper. I don't know who the heck has been buying all the toilet paper at any time, and I don't go to the grocery store very often. There is none there. None.
Who bought it all, and what are they using it for?
Yeah, really.
Where are they stockpiling all of
I'm
it?
telling you, it's crazy.
It's just crazy. So anyway, cyclical, longer term, sensitive could be day to day, and then defensive doesn't really matter.
Yeah.
So looking at it from the speeds on the highway, kind of the large cap, small cap, mid cap, domestic, international, and then the cyclical, sensitive, and defensive.
Okay.
So when we're putting a portfolio together for a client, we're actually keeping all those different things in mind.
Right.
We don't want to have, and it was interesting. I had a guy several years ago. He's like, well, I invested in the stock market and, I lost like all my money. Well, basically after discussing, he had 100% of his money in small cap technology companies.
Oh, yeah. Okay.
So no diversification.
Right.
He didn't have it anywhere else because that back in the late, 2009 or whatever, or the 1990s, 1990s,
.com boom.
it was .com, that's where all the money was being made, and he lost his money.
I guess he liked to drive really, really fast. Huh?
He was making
With
the
a
NASCARs.
blindfold.
Yeah. Blindfold NASCAR all the way. So anyway, you really need to have kind of a method to the madness on when you're making selections. Currently right now, it kind of varies on a day-to-day basis on what might be the best buys. Mutual funds are a little bit different in bonds. And for those of you not very familiar, a stock is a purchase in one company, and a mutual fund is like diversifying and getting 200 to sometimes over 1,000 different companies in one fund. So it's an easy way to diversify without having to buy tons of individual stocks.
Right.
Yeah. Yeah. I will say that when we were in the process of investing the 10 grand, we were you put the brakes on us for a minute because you were like, no, hang on a second. Like, let's talk about this. Let's talk about this choice. Let's talk about this choice and make sure that you're not investing. Because I think we were a little heavy in tech at one point.
A little heavier in tech. Yeah.
And then you were like, hang on, let's look at, these 15 and talk about them and then choose wisely. So I appreciated that.
Yeah, the diversity.
Yeah, exactly. Awesome. Well, and the next thing I really want to talk about is dollar cost averaging.
Okay.
So
yes.
Dollar cost averaging is like when you invest monthly into a 401k, into an IRA, where you could have 25, 50, 500, 1,000, whatever that might be, but you have money going in on a monthly basis. Mm-hmm. And the whole premise for dollar cost averaging is some months might be a little higher, some months might be lower, but over the course of your entire life, if you average it out, ideally, hopefully that, it will come out into your favor. Mm-hmm. Yeah. Right now with the markets down, your same $100 buys a lot more shares than it did 6 months ago.
Yeah. Oh yeah.
So you're, all of a sudden, if you buy more shares now, and when the market finally pops back up, you're going to have more money available for you to spend down the line. Mm-hmm. So, my biggest thing is don't stop investing unless, of course, you're in a financial spot where you cannot. Sure. But as long as you have money to do it, this is not the time to pull out. This is not the time to think about putting everything into cash. You really need to be strategic about it, because my folks back in 08 and 09, where we kept them in good investments, and once the market popped back up, they were really happy.
Mm-hmm.
Yeah, I bet.
Yeah, I bet.
Absolutely. And the other thing is I get a lot of, just because of everything that's been going on, somebody will hear, one of my clients will be like, hey, I saw this article, or I saw this TV celebrity who, and that's what I call the folks on TV, they're on there trying to sell advertising for the TV or the radio. Yeah. But by the time something gets in print or on TV, the opportunity is usually gone.
Right.
Oh, that makes sense.
And so it's more about, like, I had a client who several years ago, she was at a resort and all these women had these fancy Lululemon pants on. And she's like, what's this? Ends up putting like $1,000 into it, and it's now worth over 10.
Okay.
So to me, it's more about, not about who, some celebrity person on TV or some newspaper person, but when you look with your own eye, what are the trends? What do you see people buying, utilizing, doing your own little research and not really relying on those, because a lot of those things are paid, where they're trying to influence you to buy something.
Yeah. Yeah.
So that makes a lot of sense. But what if you don't necessarily have the sense around, with your eyes to, pick up on what the next trend is going to be, or,
Well, and that's something like, somebody like myself and other advisors, after doing this for many, many years, repeatedly doing this, we kind of get an idea of like what's trending now, what are good things overall, that people should invest in. But basically, we would help people, just like you guys, put together a plan. You can, of course, have your own ideas and thoughts. Yeah. But if for somebody that doesn't really have the first clue, we can basically put that together for them.
Mm-hmm.
So what you're saying is that after 20 years of doing this, you see the patterns in the market, and you can you pick up the clues.
Well, and it's interesting, even like this is an election year, and I'm not going to get political, but when you have a Democrat or Republican, certain stocks do better, or, funds do better than other ones. Yeah. So when we had a Republican that came in, I thought of defense, I thought of space, I thought of things like that. And those are things that performed very well for a lot of folks. And so it's looking at the political, it's looking at the financial, it's looking at what's trending in general, even down to a lot of people have been interested in like Bitcoin and medical marijuana. And there's some stuff that's good and a lot of stuff that's not so great. And so, so it's like, you got to be careful to not just get on a trend for it to being a trend versus something that's going to make sense for you for the long term.
Got it. Awesome.
Very cool.
So my next little piece, and I've got 2 little more quick tips, and then we'll wrap this up. But
this is great, Faye.
Go. So for the diversification, there's one other huge, very important piece, and it's the type of account that you put your money in. So you got a pre-tax, post-tax, and non-qualified. Pre-tax is the traditional IRA, it's your 401k, and that is money that you lower your taxes now, but later on in retirement, you pay tax not only on the principal, but any of the interest and dividends that accrued.
Okay.
So think of it, if you deferred $100,000 over your lifetime and it grew to $1 million, you got a tax break on $100,000, but later on you have to pay taxes on the full $1 million as you pull it out. Yikes. The next one, the post-tax, the Roth IRA, you do not get any tax break now. So you prepay tax on $100,000 for the same example. And let's say it grew to $1 million. You prepay tax on that alleged, $100,000 and the extra $900,000 comes out tax-free. Tax-free. And then the last one is a brokerage account, which is non-qualified. It's non-retirement funds. So this is your easy access money. The other 2 you really can't touch to 59.5 without penalties.
Sure.
So the brokerage account, there's unlimited money that you can put in. For the other 2, for the Roth, the traditional, or the 401ks, there are annual limits that you can put in. In some cases, there's income limits. But with the non-qualified, you can put as much as you want in. You can pull out whatever you want. There's no penalty. And you only pay tax on the gain on an annual basis. So, any tax questions, we would highly recommend you talk to your CPA. We don't give tax advice, but it's super important to know that you can have the same Coca-Cola stock in a pre-tax, post-tax, or non-qualified, and how it's taxed today and how it's taxed in the future is vastly different. So we can help with general questions, but for anything real specific, you'd want to talk to your CPA about.
Got it.
Lastly, Roth Conversions.
Yes.
Whoop, whoop. And so it's interesting. I've had multiple clients that have been wanting to shift their money from the pre-tax to the post-tax, from the traditional to the Roth, because they're still relatively young, and then they want to go ahead and prepay the tax so that they can get all those gains later on. And right now can be, and this again would be, talk to somebody like myself or me or somebody like me and talk to your CPA. But with the market being lower right now, you can convert that money over to the Roth, pay less on the lower amount. And then when it pops up, when the markets pop back up, you get the benefit of not having to pay at a higher, on a higher amount.
Bill and Nancy did that.
Yes, you did. You guys were like, yes, please.
Yes, please. Hey, do it. Well, and it was amazing because we actually had that was part of the plan eventually, and we were going to do one year and one the next year. And when all of this started hitting, we were, you were like, hey, you called and you were like, hey, you may want to consider this. And so you helped us run the numbers. We obviously did the accountant thing, and it's working. It's like literally working already. So
you don't really want to wait until the market pops back up if you've got the cash to pay the tax. But that can be fantastic. So, and right now, so you can do conversions that there's no income limitation on that. But there would be tax on that. So you don't want to we don't like surprise taxes at all. And right now, because of all the, the CARE Act, you can still, typically you had a deadline of April 15th to fund IRAs and Roths for last year. That's been extended to July 15th of this year. There's also some provisions in the CARE Act where you can tap into 401k and IRA type assets without having the 10% penalty.
Wow. Okay.
And they've also increased the amount that you can pull out. So, anybody that had specific questions, they can get with me or they can research it online, of course. But there are some things to make that cash a little bit more readily accessible to folks that normally wouldn't be able to touch it without a lot of penalties.
That's fantastic.
It is. That's great.
Awesome.
But yeah, so diversification, different types, different countries, and you can have different types of taxable accounts. And we really go through that. And I know I've kind of whipped through this very quickly, but it's so important. If people understand it on the front end,
Yeah.
and we get people investing, we might go with more aggressive stuff in the Roth.
Yeah.
Because of that, bigger growth potential than maybe we would do in something else. And we're going to go more tax sensitive in like a non-qualified account that has taxes on an annual basis.
Yeah. Yeah.
But anyway, so hopefully that made a lot of sense, but I really appreciate you guys having me.
Yeah. No,
Yeah,
I appreciate it.
makes a lot of sense. And, if you're in a position to do some kind of investing, then, now's a great time to get into that sandbox or start having those conversations. And if you don't have full understanding, get with somebody like Faye or get with Faye and have that conversation. And you start educating yourself now so you can make some great decisions later.
Mm-hmm. Yeah. It's beautiful. Awesome. Do you have any questions?
Do I have any questions?
Yeah.
No, I'm feeling very complete right now.
Yeah, no, I'm good. I love it. I love this conversation. It's so much more fun having this conversation than the get out of debt conversation. And I'm willing to have that too. I'm just saying.
Yeah. So thanks again for showing up with us a couple of weeks in a row, Faye.
Yes.
You're
Thank you.
amazing.
Yeah. Awesome. Thank you. Is there anything we can do for you?
I think you guys have filled my heart with joy by going through this process and getting out of debt and saving, having the emergency savings, doing all the things. Because, I don't know about you, but I find with myself and most people, it shifts your insides, your tummy, and kind of your comfort level with life in general.
Mm-hmm.
Oh, for sure.
Yeah.
No doubt about it.
Absolutely.
And
Hands down.
And in times like this where there might be a lot of financial stress for a lot of people, even if you haven't done it in the past, make a concerted effort to shift that dynamic for yourself, to save. And again, it doesn't matter to me if people save 10, 20, 40, 100, $1,000 a month. It's getting into the habit.
Yeah. That's
Yeah.
well said.
That's what we started with. We started with $25 a month.
Yeah.
Yeah. It was, yes, absolutely. It's very important just to get into the habit. I appreciate
Absolutely.
that. Mm-hmm.
Well, and we've got clients in over 15 states, so we can work anywhere in the U.S.
Okay.
To reach us, it's our website is www.scarletoakfs.com. Our email is fsykes@scarletoakfs.com. And the phone number is 404-354-1039.
Awesome. Very cool. Yeah, that's the direct bat line.
Mm-hmm. It is.
That's the super direct bat line.
Got it.
Okay.
All right.
Oh, that's great. All right. Awesome. Well, I appreciate you. Thank you.
Mm-hmm.
And I love you. Thank you.
You're welcome.
You're welcome.
And we love all you out there too. Love
Yes.
goes out.
Yes.
And as always, we'll see you on the flip side.
Talk to you soon. Wow, what a show. Thank you so much for listening. If you're inspired, we ask that you share the podcast with one person and subscribe and follow our show. I'm Nancy Jamison,
And I'm Bill Jamison.
and remember, it's a great life.
Woo!
Quick note about the Sex, Money, and Real Estate podcast. We are not doctors or licensed therapists. We are a joyous, abundant, and mature couple passionately sharing our story of growth around sex, money, and real estate. Our thoughts, opinions, and beliefs are our own, so please consult your doctor, healthcare provider, or your broker regarding any questions or issues you have related to your physical or mental health or specific state laws regarding your real estate business.